So today we had a very interesting day for the markets as we saw a bunch of names push upwards, as well as seeing names like Tesla have a lot of momentum. And guys, again, this is exactly in sync with what I've shared in my previous videos. And so if you guys are not subscribed to the channel, consider tapping that subscribe button so you guys don't miss out. Now, again, I want to go ahead and talk about what exactly was it that we ended up seeing for today. Now, if we take a look at Tesla stock as well as a bunch of other names, we see that exactly at 10 a.m. we saw this large push upwards in the price action, and this is mostly due to the economic data that we ended up seeing today at 10 a.m., which was the JOLTS report, or otherwise known as the job openings. Now, we know I talk about this over and over again in this channel, but it's crucial that you are aware of the incoming economic data that is taking place. For example, what we saw today in the job opening numbers was that job openings contracted far more than what expectations were. But some of you guys may be wondering, why are stocks going upwards when job openings are going downwards? And so I want to go ahead and break down why this is bullish temporarily, but absolutely horrendous going forward. And so one of the things we have to understand is the dual mandate of the Federal Reserve. They have price stability, but also maximum employment. But one of the things we've heard from the Federal Reserve, specifically Fed Chairman Jerome Powell, is that they want the labor markets to soften. Why do they want the labor markets to soften? Well, it's not because they're evil and they want people out of a job, but they're battling this monster called inflation that is somewhat what they kind of paraded as well. And so they're battling inflation. And so what they want is individuals to kind of lose their jobs. They want the labor markets to soften because, of course, jobs are the bloodline of the economy. If you don't have a job, you don't have income coming, and you can't spend, which is going to help inflation go downwards. And so they want, job openings to come downwards. And that's exactly what we're getting. We're seeing, job openings come down. That's what we saw in today's report. And so we're in this Goldilocks scenario that I keep frequently mentioning. Goldilocks is little children's book scenario, but it's absolutely true. We're at a certain point right now where it's not too bad. We're not seeing massive layoffs. We're not seeing a huge capitulation of job openings just yet, but we're seeing things start to fall down faster or harder than what is expected. And so this is causing optimism for the markets, like, hey, everything's going the way the Fed wants. Maybe now they won't have to keep rates higher for longer, which is hurting stocks. It's hurting the equity markets, right? And so that's what's currently taking place. But we have to understand that, everything looks good now until we actually get further, right? Everything looks like a soft landing until we get closer and closer, and then people realize, oh wait, maybe a soft landing might not happen, and maybe we're actually getting closer to a hard landing, or otherwise known a recession. And one of the analogies I've shared on this channel before is the idea of driving a car on a highway. If you're on a highway and your exit is far away, you have this high confidence that you'll make it out on that exit safely. You have the right control of the car. There's not a lot of traffic. You could go ahead and maneuver fine. You have just a good ample amount of time to exit safely. However, as you start progressing, as you start moving closer, well, now you have less time and you start losing confidence. And so what we're seeing right now is everything's looking good. Okay, everything's looking great. We're getting everything that the Fed wants, but we may be getting too much of what the Fed wants as we start moving forward. And so, right now, yeah, jobs are contracting more than expected, but data tends to change really quickly, and further down the line, we may have jobs contract even more and cause, unemployment to actually spike up by a massive amount. Now, I want us to pay attention to this article right over here that says Wells Fargo CEO warns of severance costs of nearly $1 billion in the fourth quarter as layoffs loom. Now, most people will see a headline like this and kind of just brush it off of their shoulder and not really think too much of it, but we absolutely have to parse through this. Now, what this article is essentially saying is that Wells Fargo, which is the fourth largest bank in terms of assets under management, what they're doing is they're setting aside a bunch of capital, more than they have in the past, to kind of set up for severance pay. And this is because they're actually expecting to do a lot more job cuts as we go into the next year. They're saying, hey, we're going to fire a lot of people, so we want to do this responsibly. When we say bye-bye to a lot of people, we at least want to send them off with some capital. And so this is not only, a Wells Fargo thing. This is not just unique to Wells Fargo. Unfortunately, we're seeing this happen with a lot of the large banks. And so this is a big concern. This is what I'm saying, that, yeah, layoffs are kind of happening just at a slower rate, and job, openings are contracting at a slower pace. But as we go into next year, this is something I've said on this channel a multitude of different times, that next year is where the real challenges arise, and that's where we're going to see more and more individuals lose their jobs. And of course, as I said, jobs are the bloodline of the economy, and so this is going to be really bad for the overall stock market. A lot of individuals won't have paychecks. Think about this. If you're bullish on Tesla, and I am bullish on Tesla in the long term, right? I definitely have exposure to Tesla in my long-term portfolio, but I am aware that 2024 is going to be a tough time for the bulls for Tesla, because think about this. If individuals, right, let's say at Wells Fargo, by the way, I used to work at Wells Fargo, I used to be a banker, but let's say you have bankers at Wells Fargo that wanted to buy a Tesla, but now next year coming, they lose their jobs. Are they really going to finance a Tesla when they don't have a job, right? And so that's going to hurt the profit margins for Tesla. Less people are, not the profit margins, but the, just the overall profits for Tesla. Less people are not going to be able to buy Teslas. Now, some of you guys that watch my videos are also part of the Push and Profit private group, and some of you guys know that one of the things I mentioned in the Push and Profit private group is that there's going to be a lot of volatility in December, and in particularly for this week as well, because when we take a look at the economic data, we see that today we had the job openings, but tomorrow we had the ADP employment numbers come out. Then on Thursday we have the initial jobless claims, and then on December we have the government numbers, or for the job markets. And so essentially we have a lot of noise taking place in the markets, and the reason I say a lot of noise is because we've had a lot of revisions in the job markets. And look, revisions are normal, but the revisions that we've had this year have been vastly greater in terms of the delta that we had in previous years. We're having one day saying, oh look, it's this number, and then the next day revising it to a completely different number. And so this is going to cause a lot of ups and downs in the markets, and we have to absolutely be aware of this. I kind of talked about this in yesterday's public video as well. But with that said, I want us to go ahead and hop into my laptop, because I want to go ahead and kind of talk about Tesla stock as well as the overall markets from a technical perspective, as well as cover some other topics that we should absolutely be aware of. But before we do so, just a friendly reminder that if you're not subscribed to the channel, consider tapping that subscribe button so you don't miss out on any future videos. Tap that bell so you get the notifications as well. And also, while you're at it, make sure to check out the links in the description below, because one of the links is going to be a link for my free weekly market post insights, where essentially every single week I send out an email for free talking about what are things that we should be aware of as market participants, and kind of just talking about the overall economy. And again, guys, like I said, it's free, so why not just sign up? But with that said, let's go ahead and hop into my laptop. So we are currently taking a look at Tesla, and of course I want to go ahead and break down the price action. What are some things that we should be mindful of, as well as the broader markets? But I also want to highlight another reason why we saw markets push upwards. We saw Tesla push upwards. If we take a look at the NASDAQ Index ETF QQQ, we saw the QQQs push upwards, and this was due to something called the 10-year Treasury yields. Now, I touched on this yesterday, but I actually want to address this. So, of course, one of the things I often say is that the 10-year Treasury yields, this is something we want to be mindful of, as when they go downwards, well, that's bullish for stocks. That's good news, as it increases the appetite for risk. But when the 10-year Treasury yields go upwards due to something called risk premium, stocks tend to go downwards, because why would investors pour capital into stocks when you could just go ahead and buy these government bonds and get this guaranteed return with these yields? And so one of the things I actually mentioned in yesterday's video was that, hey, the 10-year Treasury yields are kind of bottoming out from the earlier levels that we saw back in September. And I expected that the yields were going to continue going upwards, causing more pressure for stocks, more of a resistance. And that's indeed what we saw yesterday for Monday. But we actually saw a bit of a U-turn, where we saw the 10-year Treasury yield actually fall down further. Now, this was due, and of course, I'm going to go ahead and share this article from Barron's, right? This was, again, due to the economic data that we got today. Barron's said that the yield sank
after the latest job openings, known as the JOLTS report, right? Because job openings came in much lower than expected. And so this is something that the Fed watches. And so participants in the bond market, well, they noticed this as well. And this is one of the reasons why we saw the 10-year Treasury yields go down and bonds go up. It says that labor markets and inflation data are closely watched by Fed officials who raised the central bank's benchmark interest rates 11 times since early 2022 to rein in inflation. Of course, I'm not going to bore you guys by reading the entire article and kind of going into the nuance of bonds and what's recently been taking place, but just know that yields actually fell down, and that's another factor why stocks pushed upwards. But it's kind of like this domino effect. We had this good positive data, which caused yields to go down, which altogether collectively helped stocks go upwards. Now, I want to go ahead and, again, look into the price action for Tesla. So the view is the same, right? I'm a long-term investor for Tesla. I'm still bullish on Tesla in the long term. So in my long-term portfolio, I'm not doing anything special. I'm not buying more just yet for me personally. And I'm not selling either, right? I don't plan on selling Tesla. But one thing I've highlighted is that, this area right here has been a prominent downtrend where we see Tesla has gotten rejected on this level for quite some time, dating back to 2021. So Tesla has yet to break out of this descending trend line. And every time we get closer to this trend line, it's oftentimes a good time to short. Now, the reason I say this is because, yes, I am long-term bullish for Tesla, my long-term portfolio. I don't touch that, but I also have a separate trading account where I do trade, of course, in that trading account, as the name implies. And so oftentimes to hedge my long-term portfolio, when Tesla stock is up and it's bound to start coming downwards, I short it. This way I hedge my portfolio. But another way you could do this is when Tesla stock is around these areas, of course, you only do whatever you see value in, but something else some of the members in the Push and Profit private group do is that when Tesla stock is upwards, and if they have Tesla in their long-term portfolio, more than 100 shares, they sell some options, right? They go ahead and collect the premiums of kind of like selling the calls. This way, while Tesla's falling down, they're also making money. And so that's still the view on Tesla. I still don't expect Tesla to break out of this descending trend line, especially as we're going to see more hardship coming through. Right now, the hardship or job openings and job market softening is kind of seen as a positive thing, but it won't be seen too positive later on when it starts ramping up and getting out of control. Also, I want us to pay attention to the SPX, the S&P 500 index. We got rejected over here recently on December 1st. And it looks like we're kind of pushing back upwards, but again, we still haven't broken above this area. So again, something we want to be mindful of, right? Things are looking bullish, but it's still not too bullish. And this is exactly in line with what I said for December. Said December is going to be a volatile month. Ultimately, I believe it's going to close green, but by a minuscule amount, right? There's a lot of things kind of stifling the markets from going much more higher. We had a great November. I called out November as a great month, but definitely not something I expect for December to be a awesome month. Now, I also want to highlight this trade idea that I called out within the Push and Profit private group this morning, for example, at 9:32 a.m. So just 2 minutes after the market opened, I said that today I'll be watching AMD as a scalp trade to go long on shares or get the 123 calls once the price is below $116.45. And in fact, if we take a look at AMD, actually just got to pull it up over here, and we look at it from a 5-minute chart, we see that I was down to the exact penny calling the bottom for AMD today. We see that AMD touched $116.45. Now, remember, I called this out at 9:32, way before we even got to this level. And this ended up being a great scalp trade. If you would have just traded the underlying shares, this was a good, almost 2% return. Of course, if you traded the options, it was much more significant in terms of the return for the day. And so if you want to have access to my daily briefings where every single day I talk about what stocks I'm looking to trade, the reason behind it, as well as like what's going on in the overall economy, that's going to be the first link in the description below. That's actually a link to the Push and Profit private group, and that's completely different from the free weekly newsletter. The free weekly Market Pulse Insight newsletter, again, it's free. That's just an email I sent out, but the Push and Profit private group is a paid group, but if you do want to have access to those ideas, definitely consider it. I mean, I don't only call out the single trades like this, like AMD. I oftentimes also call out swing trades, and we've had a lot of great swing trades trades recently as well, but occasionally I also throw out those intraday trades like AMD, and as you can see for today, we called it pretty much to the penny. But with that said, I don't want to make this video any much more longer than it needs to. Let me know in the comment section down below, what are your thoughts for Tesla going in the short term as well as the long term. And also, before you guys go, consider checking out this video right over here, and I'll see you guys on that next video. Take care, guys.